So as you saw in the gold long-term forecast lecture, that we were discussing multiple scenarios, and the conclusion was that we were collectively thinking that both scenarios were pointing in the upward direction. Based on that analysis, I proposed multiple targets in the upside, and this is the video, a part of the video of the gold lecture. What I'm trying to show over here is that we had multiple targets which were around 1300, around 1450 something, and going to 1600 and higher. And this particular lecture was recorded in February of 2017, as you can see on the timeline bar on the bottom. Now I would like to show you what happened, and this is a analysis posted on June 24th 2020, right? So 3 years or more than 3 years from then. And as you can see, the analysis did play out, and the February analysis was done somewhere over here, right? And the targets, even the minimum targets, which were around 1300 something, were achieved right then, like a few days from then, which were, let's say, over here. So the minimum targets 1300 something and so on were achieved within the same year, within 2017. But what I'm trying to show is the higher targets, which were 1600 and higher, were also achieved later on. So the analysis, which was posted on in 2017 of February, played out and kept playing for multi years, because this, as you can see, is June 24th 2020, so 3 years. So basically the point here, or the concept here I'm trying to show you, is that even multi-year analysis play out if you are aware of how to use the properties and more like guidelines and rules of Elliott wave, not properties. And that's the power of Elliott wave right there in front of you. And this was what you call intermediate update of gold. And in my Slack group, I update all these things on a regular basis. Hence, there we also covered the intermediate movements, like this leg down, this leg up, this leg down. All that were covered in detail in the Slack group. But the more important thing is, and we are obviously still covering the moves which are happening, but the important or more interesting thing is that as of recording this update, that is in November of 2021, this is the chart of gold. And you can see in November of 2021 we are at 1864 and the high is around 2000. And again, this was the time where we did the analysis of gold, somewhere here in this region, back in February 2017. So the long multi-year analysis played out, and because it played out precisely as per our bullish hypothesis, the market is still in a strong uptrend. I mean, not at this part. At this part, we have multiple hypotheses, which we will discuss in one of the later parts of the course. But the whole analysis played out, and from the level of, this is about, let me just quickly check what was the actual level when we first made the analysis there. So at that point, the market was around 1234, and the market has gone to 2074. So let's consider 1234, whatever it was, as 1300, and since it has gone to higher than 2000 levels, we have 700 points. So 700 points means we have a percentage movement of 53% from the supposed predicted targets. Of course, all our upside targets were achieved and the market kept going higher. I'm not trying to check out the profit potential in this whole analysis, but what I'm trying to point out is merely the fact that the market followed our analysis, and it followed it so well that it touched all our upside targets. So I guess I've emphasized it quite many times by now in this lecture, but it is more important to build positive beliefs. Even though you know Elliott wave works, I still have to show it to you multiple times, because once you have a positive belief, you can build upon it, right? All knowledge is useless if you don't believe in it. So hence the length of this lecture and me blabbering multiple times the same thing. That's all for this lecture. I'll see you in the next one. Thank you.